I'm gonna start recording this, guys. So by people that were in wheelhouse 620s, now all of a sudden my investors went to 660, then to 680. And today with Republic Bank, I think it is going to get a little bit worse before it gets better. That's the bad news. Good news is I do not think the programs are disappearing like they did in 08. In 08, guys, it was a much worse time. Literally, I couldn't close a mortgage for months because nobody knew what was the problem was. Was it the mortgage people? Was it the banks? Was the economy that bad? So with that being said, here's Ms. Clark of Peerless, and the floor is yours.
Everybody, thanks for joining tonight. I really appreciate you guys for having me. Thanks, Manny, for having me. I am a board certified credit consultant. I did that because I was a victim of identity theft and I needed to learn how to fix my credit bad quickly so that I can buy a house and do the things that most people do. So what I'm going to do is I'm going to share my screen with you just to give you guys some information. We're going to bust some myths and we're going to show you how to build your score really quickly. Hold on 1 second. Get my screen. Is it gonna let me? Okay, come on, share my screen. Okay, it said it disabled the screen sharing for me. Can you get the screen sharing up for me, man?
I just gave you permissions to do it.
Okay, cool. There we go. All right, guys, give me a second. Let me move this out of the way. All right. So building credit scores and busting myths. That's what we're going to talk about today, guys. We're going to look at how your score is calculated. As you can see here, your payment history is 35% of your score. So please make sure, guys, that your customers or yourself, if you're looking to build your score or keep your score or maintain a score, paying on time is definitely, I know people are like, well, duh. But guys, when people are having issues like paying credit cards or paying their bills, they will let a bill slip. Credit card companies, creditors, they have programs in place. You can give them a call. A good faith phone call goes a long way. These credit companies, these businesses would really rather work with you than for you to be delinquent with them and them having to close the account or report negatively on your credit profile. So if you know you're going to be late, if you're having any issues, a good faith phone call goes a long way. Keep your payment history as pristine as possible, because again, that's 35% of your score. That's like getting A's all year in school and failing your final. And that's a bummer. You don't want to do that. So payment history is really huge. Amounts owed, that's your utilization rate. Again, that's like passing all year and failing your final. You want to make sure your utilization rate is down. That's the quickest way to really boost your scores, to get that utilization rate down. Everybody says 30%. You see here 30%, but ideally you want to be between 10 and 20. If you really want to maximize your score increase, you want to be between 10 and 20% utilization rate on a consistent basis. So every reporting cycle, you can see an increase in your score. That's the goal. You want to see increase in points every reporting cycle. The length of your credit history is really important as well, because if you notice, when you get a new account, you may lose a few points, and that because it lowers your average age of accounts. So be strategic, be mindful of how you add new accounts, make sure you can afford the score decrease, 1. And 2, you're not just adding accounts off of emotion or impulse, because again, it will shave off a little bit of age and it will drop your score. So you want to watch how you add accounts and be very strategic in how you do that. New credit, 10%. If you have a lot of new credit, you look like a credit risk. So you don't want to have too much new credit. Again, it will shorten your credit age. But then again, you look like a credit risk to a lender. So you don't want to have too many brand new accounts when you're going for a loan, especially a mortgage, because they're going to want you to explain why you have all of these new accounts. And your credit mix, you definitely want to have a mixture of credit. Credit cards are great. You want to have installment loans like car loans or a loan from the bank with fixed monthly payments. Those types of loans on your credit profile, and that will give you a great credit mix. It shows a lender that you can handle different types of credit profiles, and that definitely helps to maximize your score when there is time for reporting. So common credit report errors to look for are identity errors. You got to take a look at your name, your address, your social security number, anything that's old and cannot be currently deliverable to you via the US Postal Service, you want removed. Names, addresses, and phone numbers, whatever cannot be reachable to you currently. Lots of times when you remove an old account, when you remove old information, the old account that's attached to that information will possibly be removed as well. So removing old data like names, addresses, and phone numbers could possibly give you a credit score increase because it will remove old accounts. I just had a student in one of my classes had a score increase of 30 points for doing that very thing. She gave them a simple phone call. She pointed out the identity errors. They corrected it for her. Some of those old accounts were removed along with that old information, and she got a 30-point increase in her score. So again, a good faith phone call goes a long way, and make sure to have all identity errors removed. It can really give you a boost in your score really quickly. Incorrect reporting of account status. Make sure you're looking at that. The FCRA, which is the Fair Credit Reporting Act, says that information has to be consistent across the board. So you want to make sure that the reporting status is the same on all three accounts. And if it's not, then you want to make sure that they're reporting that account in the correct status. Sometimes when I'm looking at credit profiles for repair, we have account that says it's open. We have one that'll say it's in collections and some other reporting status on the third bureau. We want to make sure that we're being reported fairly and consistently across the board, and all account statuses are reporting the same. You want to make sure that. Data management errors. A lot of time the companies will make mistakes in how they handle the data on the profile. So you want to take a look. A lot of times I tell my clients, make it an event, go to dinner, get your profile, if you're in business, write it off on your deductions, because you want to take your time and you want to go through your profile with a fine-tooth comb and look for data management errors. Because if the company is at fault, you want to be able to catch that, and you want them to correct that information so that one, you can be, again, your credit profile can be reflective of you fairly, consistently across the board, because that's the law. And again, it could be causing you to struggle in getting those points increased every reporting period if there are some errors with the data management. So make sure that you're looking at that, and the companies are reporting all accounts consistently and fairly and correctly across the board. Balance errors, guys. Check the balances as well. Sometimes the last date reported on these credit profiles are different dates. So that means the balance may look different on every account. But when you get a collection or if you're contacted by the company, there's really only one balance that's there that you actually owe. So make sure that those things are correct across the board as well, that the balances are the same across the board. You get a letter from the company if necessary, send it over to the credit bureaus, make sure that they know what the actual balance is. on all of your accounts. So 6 ways to build credit fast is make frequent payments. If you have a credit card that you pay monthly, you can either pay larger than your minimum monthly payment, or you can pay it in every 2 weeks when you get paid, or every week when you get paid. If your monthly payment is $25, you can pay $15 a week. When you get paid, $15 is not a lot, but it adds up to $60 a month, which is a lot more than your minimum monthly payment. And you can really chunk down your credit card payments and getting that utilization rate down really fast. You can ask for higher credit limits. If you know you've been a good customer or consumer of any credit account, you can simply give them a phone call. Remember, good faith phone calls really do go a long way. Give them a call and ask for a credit line increase, or sometimes you can go on their website and they have it right there. You can apply online on their website, but ask for a credit line increase. And when they increase your credit line, it automatically reduces your utilization rate and it'll give you a higher score. So you can ask for a higher credit limit on your credit cards, especially if you know you've been paying on time and you've been a good customer, you've been with them for at least 6 months. You want to try and ask for that credit line increase. We all know you want to dispute credit report errors. We just talked about that on the last slide. If there's anything in error, you want it off. Your name, your address, your phone number, any account balances, account statuses. You want to dispute any errors on your report. We already know if we correct errors on our report via a dispute, it will give us an increase in our score. So you want to make sure that you're looking at all of those things with a fine-tooth comb so that you can dispute things accurately and have your credit report reflect you fairly and accurately as a consumer, as per the FCRA. Become an authorized user. Everybody hear about trade lines. Well, you can become an authorized user on a family member or friend's credit card account, and that will give you a boost if they have a credit card account that has age on it, 5 years, 10 years, especially, or longer. It's super awesome. That age is what you want to make sure that you're keeping. You don't want anything too new. And you want to make sure that they have been super responsible with that card, because their spending activity will show up on your credit profile as well. You don't have to have access to the card. I tell people, don't even ask for the card. You really just want the points to make sure that that person is a responsible person, but you really don't need access to the card because your focus is to get the score increase. So you can become an authorized user. There are some companies that sell trade lines. However, if you know family and friends that are really responsible, you can ask them or entice them with a small payment to be added to their card as an authorized user. Use a secured credit card. A lot of times people dismiss this, but it really does help. Adding that secured credit card and using it as a regular revolving credit card account and being responsible and showing that activity as if it is a regular credit card, paying on time, keeping the utilization down, and using it responsibly will definitely give you a score increase because it reports just like a regular credit card. And keeping the credit cards open. I had so many people that I spoke with that was wondering why their score was struggling. And they let me know that they let their Amazon revolving account close, or they let another account close. Oh, it was only $300. Please, guys, do not close any credit card accounts. Every time you close out a trade line, it's going to drop your score. 1, the age of the account is now gone. 2, the revolving credit availability has now been reduced, and that will affect your score. So make sure you don't close any old accounts. Try to use them. If you have a lot of cards and you're not sure on how you're going to use them, oh, I've forgotten this. I tell my clients, do a set it and forget it method, do something small, a Netflix bill, a Wi-Fi bill, something small that you know you're gonna pay every month. Put that on your credit card, put it on auto pay, and then put the credit card payment on auto pay from your debit account, because you know you're gonna pay that bill every month from your debit account anyway, but you now can have a cycle of payments on that credit card. Now it has monthly activity that's always paid on time, and you're not forgetting about it, and it won't be closed due to non-activity. And then again, now you're not closing that account because you feel like it's not being used and it's small and or whatever the case, but keep those cards open because it definitely helps your score. So we all know the benefits of having a good score is to get better rates on your car insurance, your mortgages, increase your approval chances for rental applications, improve your chances of getting hired. A lot of companies will check your credit report to hire you for a job. You pay less for your security deposits for certain things, and it improves your chances for credit card and loan approval. Like Manny was stating, you used to be able to slide through with a 620, but now you have to have a 660 or a 680 or even a 720 in some cases. So you want to make sure that your credit profile is pristine and you're working on getting those increases every reporting period so you can slide into whatever mortgage program you want to with no problems. So a lot of people ask how long it takes to rebuild a credit score. Well, we all know inquiries remain on your credit report for 2 years. However, if it's 12 months or beyond, it's not really affecting you as much. So just be mindful of that. You don't want to stack a bunch of inquiries on, but anything that's 12 months and beyond, up to 2 years, is not really giving too much bearing to your credit profile. And after 2 years, according to the statute of limitations, should be coming off. Sometimes the credit bureaus are non-compliant, so you want to check for those things. Check for your statute of limitation on your debts and make sure that they're falling off when they should be falling off and things are being reported correctly on your credit profile. Delinquencies remain on your credit profile for 7 years. If you're delinquent on any account, it will stay on your credit report for 10 years that you were delinquent on that account. So again, a good faith phone call goes a long way. If you feel like you're going to be delinquent, if you're going to be behind, if you're struggling financially, reach out to the card companies or the creditors and let them know what you're going through, especially now COVID has, highlighted, or the government has really said, hey guys, you got to roll out these programs. They have been available, but they were like not telling a bunch of people. But now everywhere you turn, everybody's offering credit assistance programs, the credit card companies, the loan companies, and everyone else. So you can get on some type of payment arrangement with them to make sure that you don't go into a delinquent status, because again, that will stay on for 7 years. Most public record items will remain on for 7 years, and some bankruptcies will remain for 10 years. Now, as a credit repair specialist, the United States court system does not report to the credit bureaus. There's third-party credit collection agencies that get that information and they report it. So as a credit repair person myself, I've helped clients have these things removed from their credit profile. It's a little, tedious of a process. However, it can be done. Having it removed, because again, the United States bankruptcy court does not report to the credit bureaus. And if you were to write them a letter and say, hey, I see a bankruptcy reporting on my credit profile, they're going to respond and say, we can't confirm or deny if we're on there because we don't report to the credit bureaus. So, but without repair, they can stay on for 7 years and some will stay there for 10 years. So let's bust some myths about credit repair, guys. Myth 1, credit repair doesn't work. Yes, it does. Credit repair does work if you have the right information to work with. So you want to make sure that the person you're working with is a reputable credit repair agent. Myself, I am a board certified credit consultant with the Credit Consultants Association. You can look them up, Credit Consultants Association's website, and you will find me there. So if you're going to work with a credit repair person, make sure that they are a reputable company and that they have some certifications. Myth 2, paying your bills on time is all it takes to earn a good credit score. And paying your bills on time is undoubtedly an important step, but 65% of your FICO score has nothing to do with your payment history. Okay, so remember, paying your bills on time is 35% of your score. There's 65% more of your score that has to be tallied. So you want more than just paying your bills on time. That's definitely a great thing to do. However, that's one part of it. Myth 3, you and your significant other share a credit score. No, you do not. When two people marry, combining bank accounts or opening credit cards together is often a natural progression. Most people will do that. However, just because they're joining finances does not mean they're joining credit scores. Every single person that has their own social security number has their own credit profile. No matter what other accounts they merge together, their credit profiles will always be separate. Make sure you look for that, because some people with the same names, if the father and the son, if they live in the same house, or sometimes not even in the same home, information gets transposed. So make sure, again, that you're going through your credit profile or any of your client's credit profile with a fine-tooth comb so that you can check for any errors such as transposed information, because it could possibly be a father or a son that this information belongs to and not that particular client. So myth 4, checking your credit report hurts your credit. No, it does not. When you check your own credit, you don't get any inquiry on your credit report. Nothing happens at all when you check your own credit, except that you can find out, whether there are any mistakes or whether you've been a victim of identity theft, if you need to correct any errors, things like that. So you can check your own credit report, but we all know that there are credit monitoring sites out here all over, Experian and others that you can check. You pay them $1 or some are free, but you can check them and make sure that your credit report is accurate. Closing a credit card is a good idea. No, no, no. Closing an old credit card provides no benefit to your credit score at all, and it can definitely hurt you. Again, it reduces your credit age, it reduces your available credit, and it drops your score. So don't close any credit card accounts if you can help that. And myth 6, I have bad credit, I just have to wait. No, you do not. Improving your credit score really needs to start now. The good news is that you can do many things to prove your credit, even if your credit report doesn't look good right now. So you can reach out to Manny. He can have you connect with me, or you can reach out to me at 708-253-9893. I can help walk you through some things.
Do you want to put your contact info in the chat? You can do that too, just so they can get it. And then once we're done, I'll have Shania send also an email with your contact information so everybody has it. You guys all have mine, but yeah, like she said, team, if you guys need to get in touch with her, so I had no problem you guys going directly. She's professional. She's proven herself to me. So, and there's her contact information. I'll also email out the contact information afterwards, but go ahead. I'm sorry. I just wanted to let them know that you put it in there.
Absolutely. So if you need to reach out to me, what I usually do, because I am a first time through type of girl, I really like to help people understand their credit profile and walk them through it. If I can walk you through getting your credit profile without charging you $1, that's my goal. I like credit education. Okay, I'll do repair if it's absolutely necessary. When you walk away from me, you're gonna be the expert. You're gonna know what to do, why you're doing it, and how to get it done when it comes to your credit. Because again, it's your right to have good credit. Good credit is a right. That's why you have the Fair Credit Reporting Act and the Fair Debt Collection Practices Act. You have the Consumer Financial Protection Bureau, the CFPB, and those types of agencies that are there to assist you with making sure that your credit profile reflects you fairly and properly, okay? So if I can help you understand how to utilize those laws to make sure that your credit is good, I would love to do that. If you need any help with repair, I can definitely assist you with that. And again, while we're repairing it, you will be learning, so you don't have to ever pay anybody for credit repair again. Can't hear you, Manny.
This is why we recommend you. You know, you're very good at what you do, and you like to help people like I do. But I had a question or two myself, if you don't mind. Define, when you said a mix, what's a good mix? 10
Okay.
credit cards, 3 credit cards, 4 cars? What do you think consider a good mix of credit?
Okay, so a good mix would be a couple of credit cards, maybe 2 or 3, a car loan,
Okay.
and maybe an installment loan from your bank.
Okay.
That would be a great mix. Or a
Okay.
couple credit cards, a department store card, and a car loan.
Okay.
So
Now let
like,
me ask this. What if you don't use the cards? Does that hurt you? You know, if you
well,
don't use it, you lose it type thing?
12 months of non-activity will warrant a closure.
Okay. And we don't want closures. That's a bad thing, right?
Right, so
Okay.
try to use it at least once a year, twice a year. I tell people, try and do a set it and forget it method, you know, put something
Okay.
small in your Netflix bill or your cell phone bill or something, you know, that you're gonna pay every month and.
And have it automatically paid, right? So you don't forget that one Netflix bill in there. It's happened to me
Yeah.
once or twice. That one card you usually forgot you had that Hulu on there or
Yeah.
something silly. So give me, what's your average success story? Somebody comes to you 620, maybe a little over leveraged, a late here or there. You know, not going to hold you any numbers, but average time frame, average success story. Somebody at that
90
620,
days.
maybe looking to get to a 660.
90 days.
Okay.
So again, I walk over your credit profile with you. We do that full analysis for you. We see how many collections, all this good stuff, and
Okay.
give you a strategic game plan based on your personal credit profile. And we start to pull off the negatives and add positives at the same time. That's the key. You can't just remove negatives. You got to add
Yeah.
positives at the same time. You
Okay.
know, so that combination of activity is going to give you the most amount of points every reporting period. So
Okay.
90 days, you should see a nice, you know, increase in your score, 30 points, 40 points. 90 days, maybe 120 if they want to give you a hard time and go back and forth a little. But 3 to 4 months, you're going to see some nice activity if you're staying consistent.
Okay, good. And like you're saying, if it's just pretty much overutilization, just haven't paid off. And
That's
you know,
it.
I've seen personal scores go up 70, 80 points because of utilization.
Just for simple utilization.
Yeah.
Yep. Keeping that utilization down, teaching people how to hide their utilization. So you can hide your utilization every month, guys. So you get your credit card statement, you get your bill in the mail, you see it's not due for like 2 weeks. So that lets you know that your statement date is like
Yeah.
2 for your billing date. Well, your statement date is the date that you really want to pay your bill by. So if you got $1,000 card, you used $800 and they bill you, they just reported 80% utilization. But if you
Okay.
pay it down before the statement date and you pay it down to $200 and they bill you, now that's 20% utilization. So when they bill you and they send it out, they've reported 20%. Now you can use that card again right away before they bill you, and then you can, you know, just pay it down before your statement date, and you're never reporting more than that 20, 30% or whatever you want your utilization to look like to the credit report.
Very interesting. Okay. See, I learned a lot of stuff today, team. You know, that's why I had an expert. I don't know this. If you guys have anything, make sure you contact her directly. I'm going to shoot her an email, because if you're talking to me, you don't want to say, I got to make a phone call. Hold on. There's no need to pay operator. I trust her. She's very good at what she does. Now, quick, few more questions. Medical collections. You know, are they not reporting? They're reporting nowadays. What's the deal with those?
Well, they're not supposed to be reporting. They're
Okay.
not supposed to be reporting according to the HIPAA Act. right? Because according to the law, that is your private medical information and it should
Okay.
not be reported publicly according to
Ah,
HIPAA Act. That is
Wow.
why they are saying those are not supposed to be reporting, and they have changed that rule where it can be reported. Now, we
Wow.
know credit bureaus are not always compliant.
hell no.
That's
You
why
mean they're not honest? What? Are you kidding? Come on,
Right.
say it ain't so.
It's public information. You can look it up. They're sued all the time. People win
Yeah.
monetary, gain all the time from the credit bureaus being non-compliant.
Yeah.
Because, it took a long time for people to start getting hip to what their rights are, right? Like, you're driving a car, you've been driving since you're in high school. The police can't pull you over and tell you what your rights are to driving, and they're the police.
Yeah.
You've been driving for so long.
Yeah.
The law can't even tell you your rights to driving because you know it back and forth. So imagine if we learned credit from this long, we would know our rights and we would know how to go back and forth with these credit bureaus and not take their crap. And they get away with being non-compliant because a police officer cannot pull us over and be non-compliant. We're gonna have it in court,
Yeah, exactly.
and we're gonna
This is-
win
This
because
is
we know
true.
our rights,
You
So-
gotta know your rights.
you gotta know your rights. And if these guys are non-compliant, you can utilize these laws and exercise your rights and you can get paid. So, yeah.
Okay. So we have Elliot Glass has a question. Is a consumer statement helpful? I'm not sure if that means, if you know what that means, I could ask him to elaborate.
Consumer Statement.
Elliot, if you could elaborate maybe, buddy, a consumer statement, the monthly statement, a letter from you. If you could again elaborate so we can answer.
Right.
I don't know. Ms. Shia, I will hold on. Just let me share my screen real quick. I'll give you my contact information.
Yeah, because I want to know.
I'll just share it real quick. Let me see. Okay, Zoom, share. And you guys can have mine, then we'll let Miss Clark go. Wait, you're an hour behind, right? So everybody knows Chicago, right?
Yep.
That's right, Bears fan. We went with Knicks colors here because the Knicks and Mets, fans. That's why we went with the orange and blue.
But I like it anyway. I'm saying
All right,
go
good. Hold on, I'm just going to share my screen real quick for just a quick minute. This way you guys can have my contact information. Elliot, explanation of reason for, so you mean a letter of explanation as to, so Elliot wants to know, will a letter of explanation as to why they missed their payments? Will that help?
Well, you would call that like a goodwill letter? A good
Okay, like you
faith
said, a good
letter?
faith phone call or something, right?
Yeah, a good faith letter.
Hi.
Not really explaining why, but asking them if they would be willing to switch over the negative reporting, because you can say, really nicely, well, I've been a nice customer. I've been with you guys for 10 years. I've never missed any payments. I just had some bad times, and before then I was paying one time and never late and this and that. So that would be called a good faith letter. And you can send that in, and that can possibly turn over the negative reporting. But again, you have to have been a good paying client before you have this issue with your credit account. But good
Okay.
faith letters do work.
And Elliot, what do you mean about the credit bureaus? To explain that too. Do you still mean a letter of explanation? I think she answered that pretty well. If not, let us know. You guys know I like to keep these things quick to keep your attention. Ms. Clark, thank you so much.
Thank you.
Again, guys, give her a virtual round of applause. I really appreciate it. I'll go over your loans to you tomorrow too that you have with us. Not only does she give loans, she also gives us advice, guys. So with that being said, team, thank you very much. I will see you all next week. Tune in tomorrow for next week's topic. Thanks, team. Everybody have a good one. Speak to you soon.